So we didn't just buy one investment property, we actually bought two. Well, technically it is only one property. We're on one title here, but we did buy a duplex, which is essentially two units that are adjoined by a common wall. So today I want to run through the numbers on why this property was so attractive to us and why we bought it. Come take a look. So there's 5 reasons why this property was so attractive to us, and those 5 reasons are, I think, things that everyone should be focusing on if they are looking at buying an investment property. The first reason this property was so appealing was because it was below market value. Now, it's easy to go, well, it went to market, it sold, that's market value, but it really wasn't the case for this one. I work in real estate, I'm looking at properties every day. I was actively searching for a duplex at the time, and I didn't actually see this one advertised. It was only that I was speaking to a colleague and he told me about this one and the fact that it was on the market. It was never actually advertised online. It was literally just a for sale sign at the front. We ended up picking it up for $365,000, and very comparable properties in the area are selling for $400,000. So instantly we gained $35,000 equity the day we went to contract on this one. The second big appeal of this property was there is an opportunity to add value. Already we've come in and put in the new front fence, which really gives a bit of separation for each of the units. We're currently clearing out the back gardens, which were quite a mess. It was overgrown banana trees. There was actually a second fence here that, sort of separated the backyard. It was, left a lot to be desired. There was a couple of things we're not doing to the property though that might not be as obvious. So I just want to point them out. Firstly is the vinyl flooring that is in here. It's dated, it's not overly attractive, but for a rental grade property, especially at this price point, there's actually nothing to be gained by redoing the flooring. It's something we may do before we sell the property in 20, 30, 40 years time, but it's not something that needs to be done now. The other thing that may not be instantly obvious is how beautiful this blue bathroom is. Now, a lot of people's first opinions is to rip this out and change it over completely, but once again, at this price point, there's actually not much to be gained on the rental side by spending $5,000-6,000 redoing a bathroom. So we're going to leave this as is, as we're not really going to see a benefit in the rental returns by changing this over. Once again, if we ever do go to sell the property, it is probably something we will consider doing, is the bathroom, is our flooring. But for the time being, as a rental property, I think it's absolutely perfect as is, and I don't think we could actually improve the rental price by changing over these couple of things. The third factor that we really liked about this property is that it is in a growth area. We're only located about 10 minutes away from the Cairns CBD, and basically in that circumference of the city, there's no new development going on. Essentially, there's no more land. What is here at the moment has been built in. It's not until you go to the north or the south side of the city that you really start to see new development. So supply really is restricted through this area, and there's very good demand. So I can see this area continuing to grow into the future, and that was the third reason we bought it, is we do consider this a growth area. There are plenty of areas across Australia that have strong cash flow, but a lot of these areas are extremely regional, and if you need to sell the property, it's just not liquid. It may take 5-6 months to actually achieve a sale. So that was the fourth reason that we really like this property, is the fact that it is in an area that I'd consider quite a liquid market. That is, if we do need to sell it, it shouldn't take more than a month to get it under contract and then another month to settle. So it is a relatively liquid asset in the scheme of things, and that means that if we do need to sell it, we'll be able to sell it in a relatively quick time frame. The fifth and final reason that we were really attracted to this property is cash flow. Now, I'm a big believer that if you are buying investment properties, aiming for something that's cash flow positive is just going to make the whole process that much more appealing. and you're so much more likely to repeat it again and again and again, versus if a property is cash flow negative and it essentially will start to affect your lifestyle week in, week out, as you have to chip in money to maintain and hold on to that property. So this property was heavily cash flow positive. I want to run through some of those numbers now with you quickly. First of all, we paid $365,000 for the property, and it cost us about another $15,000 in fees. So all in, we bought this property for around $380,000. Now, we actually use the equity in our current home for the purchase of this property, so it cost us no money essentially to buy it. We just used the equity, so we committed another property to this one, but it didn't actually tie up any of our existing cash. So we bought it for $380,000. All up, our outgoings for this property are $102 a week, $112 a week, sorry. So that's our council rates, our insurance, our water comes to $112 a week. So that's our constant outgoings. Look, they may go up over time, but they are pretty much set. They're not going to rise much more than inflation. So that's our fixed outgoings. The other associated cost of this property is our loan repayment. So we've taken out a 30-year principal and interest loan on this property, and each week our repayments are $379. So that's each week we pay down the principal and we pay the interest on the loan, and that comes to $379. In total, this property essentially costs us $491 a week to hold. So that's all our outgoings, our council rates, our insurance, our water, our principal and interest loan come to a total of $491. This property, between the two sides, is renting for a total of $640 a week. So each week we're actually $149 in the green, positive cash flow on this property, and that's including principal and interest repayments. So that works out to be $7,748 a year this property generates in cash flow. And the beautiful thing is that isn't the whole picture. Essentially, we are paying principal and interest, we are paying down that loan. Each year the loan will be paid down $5,252. Well, that's the first year. Each year that will get more and more. As we pay down the loan, we're paying less in interest, more off the principal. But in the first year, essentially this property is truly cash flow positive at $13,000 per year. So that's a really strong position and something that really attracted us to this property. And the attractive thing about duplexes is you are getting considerably higher returns than if you were just buying a single dwelling. So there you have it, guys. That's the 5 reasons that we bought this property. So it was below market value. There was an opportunity there to add value to the property. It's in a growth area, an area that we perceive will continue to go up in value over time. It's a liquid asset. If we need to sell it, we'll be able to sell it quickly. And finally, the property is very cash flow positive. If you have enjoyed this video, make sure you click the link to the site. That's on another unit that we bought here in Cairns, and goes through to show the numbers on that unit and how that stacked up as an investment. Look forward to speaking to you soon. Have a great week.